Earlier this month, CREA, the Canadian Real Estate Association, updated their 2023 housing forecast. Their original forecast came out in January, but since we've seen increased sales activity, buyer confidence, and higher prices for about 3 months in a row for most markets in Canada, we now have a revised report. In today's video, we're going to break down that report and show you what's supposed to happen, or at least we're forecasting what's going to happen in 2023 across the Canadian real estate market. My name is Tom Story. Thank you so much for being back on this channel. I make educational real estate videos about the Canadian real estate market with a very specific focus here on the city of Toronto as well. If you haven't already, make sure to subscribe to the channel. We are just on the cusp of 9,000 subscribers, and the goal is to get 10,000 by the summer. And if you enjoy this video, please make sure to leave a like. You can also go into the first link in the description and book a call with me at a time that works for you. So let's just jump right into this and see what CREA is saying in their updated housing forecast. Okay, so the average home price to end the year lower than 2022 from the Canadian Real Estate Association. Now, the Canadian Real Estate Association expects that the average price of a home to end the year 4.8% lower than 2022, but says that prices will rise for the same amount of time in 2024. Okay, so they expect that prices are going to be down roughly 5% this year compared to last year. What we have to keep in mind is that last year's prices were bloated by the first 4 months. So a lot of this year, year over year, up to at least April, is going to look very negative. It'll be very interesting to see what happens May, June, July, because that's when the market started tailing off last year, to see if those year over year numbers are still negative or if we actually start to see positives again. They went on to say that their prediction for 2023 amounts to an average price of $670,000 this year in all of Canada. So this is massive macro data, right? Where all you should care about in your market is actually micro data. And then $702,000 next year when prices are expected to increase 4.7%. Okay, so this year we're supposed to go down almost 5%, and then 2024 we're going to go up almost 5%. So basically you're going to end up in the same spot overall. Now that's what they were talking about specifically with prices, but what about sales data? So the board also foresees falling 1.1% to 492,000 transactions this year, and then rising almost 14% to just over 550 transactions in 2024. These are all somewhat reasonable predictions, right? Because a lot of us maybe believe that the worst is behind. Not everyone believes that, but a lot of people that are looking at the numbers believe that. And then moving forward now, if we think that rates are going to at least hold till the end of this year, not ideal for people with variable rates, but better obviously than the rates going up. And then you look at the new people entering the market and the confidence and the multiple offers that you're starting to see come back to certain pockets across this country. I understand why they think, yeah, this year overall is going to be a little bit down from last year. But what I think you should be focusing on if you are a consumer in today's market is the month over month price increases for the asset type that you have in the area that you are located in. I also thought this was a pretty interesting quote. So what they said was, as the spring market heats up, and it looks as though some buyers are coming off the sidelines, it's important to remember that the intense market conditions of recent years have not gone anywhere. They've just been put on pause, right? And obviously the interest rates have put them on pause. But then they get to the fact of what's happening today is that, in the recent months with the 2 rate pauses by Bank of Canada, it's prompting some to start eyeing purchase opportunities again. So in summary, they think if you take all the sales that happened in 2022 and compare them to all the sales that are going to happen in 2023, the total actual average price in 2023 is going to be 5% lower than 2022. But then in 2024, compared to 2023, it's going to be 5% higher. So we're going to end up in that same place. The key thing here, as it always has been, is going to be 3 specific factors for your market. The first factor is going to be immigration. How many people are going to come to Canada this year? And we expect those numbers to be high. But then where are they going to settle? What specific markets are they going to? The second key factor will be interest rates. It's going to be very interesting to see what happens, not just with Bank of Canada, but with the 5-year bond yield as well and the fixed rates over the next 6 months. And the third pillar we would look at is the unemployment rate in specific markets across this country. We expected there to be job losses this year. We've seen some of that in the tech sector, but we've also seen tons of job creation, which I don't think a lot of us were anticipating. So there you go. There's a full Canadian outlook of what they think 2023 is going to do. But If you are looking to make a move this year, know your micro markets, run the days on market average, know what's happening in your specific area. That is what will be most important to you. Thank you so much for watching this video. My name is Tom Story, and remember, home is where your story begins.